Look, if you're aiming for an average credit score, you're basically losing money. Just keep being a good person and following the bank's rules. You pay every bill in full on the exact due date, thinking you're a highly responsible borrower. But to the cold, heartless math of the FICO algorithm, you aren't a hero, you're a massive liability. While you're sleeping soundly, the system is taking an automated, static snapshot of your life that you never authorized, and it's deciding the cost of your future. Today, we're ripping apart the underlying logic of the U.S. credit system to show you why elite players never play by the rules you were taught. By the end of this, you won't just have a higher score, you'll have a digital firewall that makes your heavy spending keep your reported utilization flawlessly low. You treat the due date as the most sacred day on your financial calendar. You transfer the money before then, avoid the interest, and feel like a flawless customer. But in FICO's eyes, your attitude is irrelevant. The credit bureaus are not live streaming your checking account 24/7. Think of FICO like a parent who only checks your room once a month on statement closing date. If your room is a disaster on that one specific day, you're grounded, even if it was spotless for the other 29 days. That's the trap 99% of people fall into. Picture this. You have a credit card with a $5,000 limit, and this month you drop $2,000 on new furniture. You have enough cash in the bank and plan to pay it in full when the bill arrives. But before you send that payment, the closing date hits. The bank generates a PDF statement saying you owe $2,000. In that exact moment, the bank's system automatically beams that number to the credit bureaus. Even though you pay the balance in full 20 days later on the due date without paying interest, the credit bureaus only saw one thing: a borrower maxing out 40% of their limit. You did everything right, yet the system punished you anyway because of a badly timed photo. Here's the pro move. Beat them at their own game. A few days before your closing date, log in and pay off almost everything. But leave about $10 on the card. When the bank takes that snapshot, they report a tiny utilization rate, making your credit record look flawless. It looks like you barely touched your limit, and you simply pay that final $10 on the actual due date. With this tiny tweak, your credit report prints a flawless, low utilization record while you still enjoy the zero interest period. But honestly, that's just the best case scenario. What if you spent a ton this month and don't have the cash flow to pay early? Let's look at another way. Control your denominator. Credit utilization is a direct math problem. Your current debt divided by your total credit limit. If you can't shrink the debt, inflate the limit. Every 6 to 12 months, you should proactively open your banking app and request a credit limit increase. Today, most major banks do this using a soft pull, meaning the system evaluates you silently in the background without leaving a hard inquiry mark on your report. As your limit gets inflated, your existing debt percentage naturally gets diluted into a premium safe zone. If your limit increase is denied or you don't want to take the risk, you still hold another card: internal limit shifting. Let's say you have 2 or more credit cards with Chase or Amex. You just booked vacation flights for the family on one card, pushing its utilization near 80%. Remember, FICO is obsessively sensitive to high utilization on individual cards. One nearly maxed out card is enough for the system to label you as someone on the edge of a financial disaster. Here's what you do. Pick up the phone and call customer service. Tell them clearly that you want to move some credit. Take it from that old card gathering dust in your drawer and transfer it to the card hitting its ceiling. This is a routine internal resource allocation for banks and triggers 0 hard inquiries. Through this internal limit transfer, you instantly erase the red flag of a maxed out card and move your entire account structure back to the safe zone the algorithm loves. If your credit file is as thin as a single piece of paper, you need to leverage someone else's financial reputation. This is the core logic of becoming an authorized user. Find a parent or spouse with an 800+ score and ask them to add you to an old account. You don't even need the physical plastic. You just need your name attached to that flawless data stream. Once it syncs, your file instantly thickens. But keep your expectations grounded. FICO is smart and weights the primary holder much heavier. It's a stepping stone, not a magic wand. If you're running an e-commerce business, stop using your personal cards for ad spend. One heavy week of traffic will tank your personal score. Get a business card so your ad spend doesn't mess up your personal credit report. But here's the catch that catches most people off guard. Most of them still hold you personally liable, meaning if the business goes south and you can't pay, they're coming after your personal score anyway. Even with all the tricks, you're still racing in the mud if your report is inaccurate. The amount of garbage data hiding in the system would make you break out in a cold sweat. Unauthorized inquiries, late payments that aren't yours, or addresses from a decade ago. This is why you must pull your complete reports every year and audit every single line like a paranoid accountant. If you find trash, dispute it directly on the Bureau's website. You aren't finding a loophole. This is federal law. They have 30 days to verify the information. If they or the creditor cannot prove it, they are legally required to delete it. Clean up the garbage, and your score will naturally bounce back to reality. Once you clean up the mess, you might want to cancel those old, ugly student cards gathering dust. Don't do it. You think you're streamlining, but you're actually chopping down your own financial foundation. 15% of your FICO score relies entirely on your credit history length. Close that account, and your average age shrinks irreversibly. The smart play? Buy a coffee with that card every few months and set it to autopay. It stops the bank from closing the account for inactivity and keeps that 15% weight working for you forever. Beyond time, the algorithm wants to see your ability to juggle complex debt. It's called credit mix, and it makes up 10% of your score. If you only hold credit cards, the system thinks your experience is too narrow. FICO loves seeing installment loans like car loans, mortgages, or personal loans. But here is a dead serious warning. Never take out a loan you don't need just to please this 10% metric, and never pay unnecessary interest for a score bump. Diversity should be a byproduct of your actual life, not a manufactured financial cost. In 2026, data breaches happen every Tuesday. You must master the ultimate physical shield, the credit freeze. You can do this for free on all 3 Bureau websites. Once frozen, nobody, not even identity thieves, can open a new credit account in your name. You just put a massive padlock on your financial life. Need a new card or loan? Just log in, temporarily unfreeze it for 24 hours, and it auto-locks right after. The effort is basically zero, yet it makes you invincible in the digital wilderness. Finally, when you're ready to use that elite score for a massive loan, don't let hard pulls terrify you. The FICO algorithm is not completely brain dead when it comes to rate shopping. If you are hunting for a mortgage or auto loan, cram all your applications into a 14 to 45-day window. The system knows you are looking for the best interest rate. It takes all those identical hard pulls and mashes them together into a single hit, allowing you to hunt for the cheapest borrowing cost without fear. Back to the start. Why do you pay on time and still feel targeted? Because a credit score is not a morality test. It doesn't care if you are a good person. It is just a cold, heartless math formula. It only cares if you understand its underlying rules. By timing your snapshots, diluting utilization, building business firewalls, freezing your files, and utilizing rate shopping exemptions, you stop being a victim. You become the manager of the algorithm. That is the truth elite players never tell you. Now it's your turn. Go check your report. Seriously, found something weird on there? A debt that isn't even yours? Drop a comment below and let's talk about it.